Hi, I'm Bert Nussbaumer from macrobeat.co.uk. We're still in the summer lull, really, and the Fed minutes was the only thing that did wake us up this week, at least briefly. The Fed was really expected in the minutes to show some result of their policy review, which the market took as a chance that maybe we do get the yield curve control in the September meeting. But to the surprise of the market, that was not the case. So the Fed doesn't really see an imminent benefit of yield curve control. They're worried about the sharp increase on the balance sheet. So the market had to correct. We saw a brief rally in the dollar. We saw a brief sell-off in the equity market, but with the dollar still in a very entrenched trend right now, that didn't really last too long. Further down, we have probably a date for the diary now, the 27th of August, where Fed Chair Powell will speak at the Jackson Hole conference and give some more light into the policy review from the Fed. But as things stand, rate cut to negative rates has been ruled out quite a while ago. Yield curve control got a setback too. So really the only thing for September, which is the last meeting before the presidential election, I could only really see an increase in the QE as the only sort of thing, which again probably keeps the dollar on the weak side. In Europe, today we had very weak PMI, so the give back has started in terms of the first leg up on what the market expects to be a V shape. Obviously, that got a setback today. Whether it sort of stays a V or turns into a square or into a L or a W, we have yet to see. But clearly, that's what we've been saying all along. There's some worries that the V shape may be just not happening. On that side, that leads me into the first slide, which we have the Dow Jones. Not much has happened in the last 2 weeks. We stay in that 27,580, 28,170 range, which really we only have to discuss when we start to move lower. I would say the Fed minutes were a small setback. Weaker data would be the second one. So at some point, the market has to wake up to the fact that things are not quite the same as they have been. But for that, we have to break 27,580. And the key for me is 27,227. That's a mid-daily Bollinger Band. A break there would tell me the unwind is on the way. And I definitely think stocks are running out of steam. Low volume out there. So right now, they're just running on fumes in my view. The next slide, this is euro dollar. Still a consolidation at a very high level. The ADX that you see on the bottom half of the chart still would confirm continued consolidation in the dollar at this stage. The scary part for those that want to buy cheap euros is that the consolidation first was around 117. Now it starts to be around 118. Hopefully the weaker PMIs today in Europe will give a little bit of a push lower. I still dream of buying euros on a 116 handle, but the longer this is going on, the lesser that is probably going to happen. On the next slide, we have the DXY. We finally did break this 92.55 level, had almost a run down to the next key fever support at 91.90, had the pushback from, as I said, the Fed minutes. That didn't really break the 93.20 pivot and mid-daily Bollinger Band. The dollar continues to trade very weak. On the next slide, we have dollar yen. Dollar yen has really not done a heck of a lot in recent weeks and is still really been holding in quite well, which I think is about to end with the inactivity or the sort of stale dollar yen. I think yen crosses have gone too high, which are starting to turn. I think dollar yen is probably about 3 big figures or 300 pips too high compared to what the rest of the dollar has been doing. The last few days have started to show some weakness in dollar yen, that maybe finally it's time that if the broad dollar weakness stays, dollar yen has to do some catch up. The last slide I have, this is euro yen. That symbolizes any yen cross you want to pick. We see there that we start to run out of rope a little bit. We're breaking the mid-daily Bollinger Band for the first time in the last sort of 5-6 big figures. This would be an early signal that the yen crosses are rolling over. And if we think that the euro dollar is gonna net stay bid, the only resolution for a lower yen cross would be if dollar yen finally plays ball and catches up with the dollar move. That's it for me for this week. Thank you very much indeed. Bye-bye.